Hey guys, welcome to Complete A to Z Forex Trading course by Let's Do channel. In this course, I'm gonna train you from beginner level to the pro level in just 5 videos. So in this video, I'm gonna cover part 1, which is included what is Forex, what is BIP, how to read currency pairs, and bid and ask values. Also, I highly recommend you to watch all these parts of the course if you really want to be a pro trader. So before you're heading to the lesson, I kindly request you to subscribe and click the bell icon to be notified for our next videos. Let's see what is Forex means. As you can see, it simply combined 5 letters from foreign exchange. So Forex is actually the largest market in the world. In an average trading day, Forex market trade up to $5 trillion. It's 5 with 10 to the power 12 if you want to write it down. So in the market, we trade values based on currency pairs, or the other way, its exchange rate or through countries. Next, let's see how currencies exchange of foreign market works. Imagine that you're gonna go to United States of America from England for a holiday, and at the airport you will have to exchange your pounds to dollars because you can't spend pounds in USA, of course. So at the counter you will see the price for GBP USD, or USD versus GBP is 1.2449 or just 1.2. What does that mean? It means when you exchange GBP into US dollars, you get 1.24 US dollars per pound. So it also means pound has higher value or high demand in the market than US dollars. Why there's difference between currencies? It mainly depends on economic condition and policies at each country, such as economic stability, inflation, foreign trades, employment and unemployment status, interest rates, growth rates, political conditions. So if you want to become a pro trader, you will have to concern about all these things on each countries of the currency pairs. Also, you should know what are the advantages of trading in Forex market. Mainly it has flexibility, like you can decide your own time frame for the day to trading, as it's open 24 hours and 5 days per week. Then you get trading options, hedging risks, low cost transaction, inflation control, and also high leverage such as 1 to 500 through most brokers. In my next videos on this video series, I'll explain one by one to deep down at these advantages for you. Now let's move to the very basics level of trading, how to read currency pairs and what is a BIP means. Let's get same currency pair GBP USD, and it has a value of 1.24495. So as we already know, this simply means you get 1.24495 US dollars for 1 pound. We read this as USD versus GBP. In here, GBP is the base currency and USD is the core currency, because we calculate our trade pound value against the US dollars. Now let's see how to read numbers or the values. In this number, the 4th decimal point is what we call a pip. Now you will think what is the smallest number is. We call it a pipet. It's the 5th decimal point number at the value. So if the value at this currency moves 1 digit only from the 4th decimal point, we say 1 pip different. I suggest you to find out some different values for different currencies and practice the different from pips, because we might need it for the next lesson. Also, in some currencies only have 2 decimal places, such as Japanese yen. So we take the 2nd decimal number as a pip and the 3rd decimal number as a pipet. Next important thing is to understand the difference between bid value and the ask value. Let's take the same currency GBP USD. When you start trading, you should have realized there's 2 values for one currency, and one of them called bid or sell value and the other one called ask or buy value. Ask or buy price is that the sellers are willing to take for it. Imagine that you are a seller of some kind of product and you always want to sell it on the maximum price to make a profit on it. But the buyers are always bargain on it and they want to reduce it. So the bid or sell price is that how much buyers are willing to pay for it. So there's always a gap between buy and sell price. We call it a spread. In some currencies there's a huge difference, maybe 2 to 5 pips, because of the higher demand in the market for that specific currency on that time. but the sellers are not ready to sell so cheap. In that case, the price goes up. Also, in it the other way, when there are so many sellers and there's no demand for the product or the currency, sellers have to put the price down to sell it because of so much competition. In this case, price moves down. So the definition is ask or buy price is the prices quoted for an immediate sale, and the bid or sell price is the price quoted for immediate purchase. As in this picture on the left, this is what we call trading. Buy at ask and sell at bid. Then you'll make profit on it. Now we'll see how do you make money on forex trading. Imagine that you have trade $1 a pip on this trade. About how to calculate pip values I'll explain in my second video, so don't hesitate about it. So you open a buy position or buy this currency at 1.784 and one of each bars indicate 1 hour. So after 4 hours, when you close your buy position at 1.2768 or you sell it, the difference is 983.7 pips. Because you trade $1 per pip, at the end of your trade you get $983.70 as your profit. This is how you make money. You predict or assume based on technical analysis and news about the market for the next few days, hours, minutes, or even weeks and months sometimes, and make profit out of it. It's quite similar to buying and selling business. Buy something for lower price and sell it when it goes higher. The interesting thing is you can make money when the market moves both ways. We call it hedging. But it's not like you buy this at lower price and sell it in high price. You have to open a sell position if you predict market is going downwards in high price. So imagine you open a sell position at 1.2768 and wait for 3 hours and close it at 1.1784, and the pip value is also $1. So at the time when you close it, you can make $983.70 on this trade. I'm not going to talk about deep down this topic now because it will definitely confuse you right now without knowing further lessons. So this is the end of my first video guys, and take a break, memorize what you learned from this and join me with my next videos for forex trading A to Z full course part 2, which I'm going to cover trade sizes, how to calculate pip value, how to put trade orders, and how to open trades and risk management. So thanks again for watching this video guys, and if you really enjoy it or learn something, please hit the thumbs up button. Also don't forget to subscribe to our channel. See you in the next video.